Oh, here we are. We made it. We've been having some technical difficulties getting the show off the ground. Today we're going to be doing something a little new. Some new visuals. We're going old school, real school, maybe. Hey, what's up, Steve Straza, my friend. How are you? This is the Flow Show.
So we were joking. We were joking with our production team, and we couldn't. We're having issues with the trading view, and I said, "Why don't we just show them like what we're really looking at?" And then we joked, we laughed, and Gene from the production crew was like, "Oh my God, this is disgusting." And then you said, like, "This is what we look at for the
This is
majority
what
of
we
the time."
look at all day long.
So we come on and we do these shows and we show these pretty charts from TradingView and Optima and all these others. But shout out TC2000. This is what I'm using all day. I know my good friend and fellow trader Brian Shannon is using all day. I know a
Gene,
number
bring it
of,
up on the screen if it's not up there now. Let's talk about this. This is old school. I mean, TC 2000 is about as old as it gets.
and Sean, I haven't changed this dashboard in 8 years. 8 years. This is it.
Yeah.
So if we're reading from left to right here, I have my sectors up top, right? I have a number of different rate of change scripts here, right? 5 day rate of change, 21 day, 65 year to date. Volume buzz, which you have always found funny. It's just a percentage of the daily volume versus an average volume number. And then below here, right? And we should probably pull this up. I have my subsectors, right? So it goes, this is the true top-down approach to trading, where I'm looking at sectors first, subsectors, right? So on a day like today, we might say, hey, look at technology. Technology's ripping up 1.5%, making almost new all-time highs, right, at the index level. Let's drill in. Where's the strength in technology stocks today? Well, computer systems and electronic components are each up over 3% at the subgroup level, right? Oh, let's see those charts, right? What do those look like? And then I can go over here to the right-hand side of my screen and say, okay, who are the leaders in that subgroup today? And this is all I'm doing, Sean, all day long. I'm
You
reading
know,
to say,
I
what's the
love that you said that this has been your layout for 8 years because, I mean, look,
what more
as
do I
much as
need?
we like to talk about how we're like ahead of the curve with all the new bells and whistles and all the new technology that's available, at the end of the day, traders, we hate change, right? We get our platforms that we like, we know how to use them, and then we don't want to change it. Yeah, there might be a better platform out there, but we know this platform, these ones we're using, and that's it.
Well, it becomes a part of the system, doesn't it?
It does. I just, in the last 6 months opened up an Interactive Brokers account, which I've never used.
Yeah.
And I just use it now for one specific trading strategy that I do. I still trade through Tasty Trade. I still trade through Thinkorswim with different accounts. And Tasty Trade and Thinkorswim, I love. Like, they're great. I've used them for years, for the longest time ever. And I don't ever want to leave them, but I've been using Interactive Brokers, and it's fine, but it's like I don't know it. It's so like I don't know where all the hidden tricks are and all the buttons. I make fat finger errors all the time. It's frustrating.
But isn't it a language? It's a language. You learn your broker, you learn your broker's platform. That becomes your method to trade. And to switch that is a big deal.
Yeah,
Really.
yeah. All right. Well, nobody wants to hear us complain about that. Let's talk about some ideas. This is the Flow Show. For those of you watching for the first time, this is where Straza and I kick around some ideas, see some setups that we like, and see if there's a way we could trade them with a simple option strategy, maybe a complicated option strategy. We see what makes sense. So Straza, we were kind of joking right before we went live while we were dealing with technical issues that feels like the bull market's back on. It's time to get aggressive again. Where should we be looking?
We can go anywhere. I think technology is an obvious place. This is more of a trading show, right? If we were looking out a couple months to a couple quarters on most of these trades, I would say industrials, but like I don't know if I want to enter. Look at the last couple days in industrials, right? I don't know if I
Hmm.
want to enter something like this right here, right now. Technology is really the other group. And look at how much more controlled of a chart structure we have here. So tech stocks ran up. This is an equal weighted index of large cap technology stocks. They ran right up to new all-time highs in early December, and then they've been consolidating for the last, I don't know, call it a month, right? If you zoom out on this, There's no better trend in the market. Those are the prior cycle highs, right? It's go time. So if we look inside of technology right now, everyone wants to talk about semiconductors and software. But there are other groups. I think we can go a different way and hit up computer systems or electronic components or computer distribution. There's some stuff.
Well, I know this is not technically part of the technology sector, but it's in the sphere, so it's got me concerned, and I want to talk about what's going on with Apple today. What is I don't understand. I mean, I'm not following the news. I understand there was some Pelosi sale, big deal. Who gives a shit? But I'm
Isn't
finding it hard to see what Apple's doing and having that reconcile with what everything else in the market's doing. This is weird.
isn't that funny though that Apple's down 4% today and all anybody's talking about is Nancy Pelosi selling $8
Yeah,
million.
she had nothing to do with it.
Here's the thing. Nancy Pelosi is a perma bull. I've been tracking her forever and her insider moves. She just sold $8 million worth of Apple. She didn't roll it. She sold Nvidia too, but she bought more calls, right? She sold all of her Apple stock and didn't buy any new calls, nothing. So Nancy's out of the Apple. I don't know. I'm just saying, Sean, I get it. And here's my rebuttal, right? If I had to make a bullish rebuttal, you say, hey, Apple's down 4%, and I'm going to say, look at this beautiful textbook bull flag in Amazon,
That does look good. I
right?
that one had slipped my radar.
So they're rotating, I think is the bigger point, right? Like maybe they're out of Apple today, but the other Mag 7s continue to work. So I don't think it's a area of concern.
I'm looking at that Amazon chart right now, and I'm thinking to myself, somebody knows something coming into earnings. Earnings are on deck pretty soon. What
And
do you
that
think?
and in bull markets, isn't that usually the case? Where you look at a chart and you're like, oh, earnings are coming up. There's probably going to be a positive reaction. And they're
I
usually,
uh,
yeah,
I could get involved in this Amazon. This looks compelling here. Maybe a little call spread, a little out of the money call spread because implied volatility is a little elevated here. No surprise with earnings coming up. I don't know the date. Is it coming up in the next couple of weeks?
you would do it ahead of earnings though.
Well, I mean, if we could define our risk, why not? Use the earnings as our catalyst to hit our profit target. And if we're wrong, at least we know what our loss is. I got no problem. I've come around on that, Straza.
Yep.
We've been doing this for a long time, and I know years ago I was always like, I'm not touching anything if there's earnings coming up in the next month. I'm out, not touching it. I've come around on that a little bit, mostly because as an options trader, I could define my risk. If I was a stock trader, same thing. I would not touch it. But with options, what am I afraid of? I could define my risk. I'm a big boy. I could accept it if I'm wrong and I know what I'm going to lose. It just happens faster. No big deal. But if I'm right, I'm also right faster, which is great.
I think that's the right take. Like I have warmed up more and more towards trading around earnings because if you just align yourself in the direction of the underlying trend, there are good surprises and there are bad surprises, but you tend to get good surprises more often than bad surprises if you're lined up with the underlying trend. Simple as
Right.
that. Yeah. No, I'm with
So
you. Listen,
I'm
if
not
you
afraid of Amazon here, is what I'm
do,
trying to say.
do Amazon, I was gonna flip through and show you a bunch of different like strange names in the computer systems group.
No,
No.
let's not do strange names. And here's why.
Why?
And maybe I'm just married to my stance that I've been kind of pounding the table on since
They're
the
all
end of
quantum names. They're all quantum names.
Oh, well, that's
Quantum.
fine. I'm not afraid of quantum, but I said it at the end of the year, coming into this beginning of this year. I said that the bull market's going to be different, and I want to focus on the leaders in the spaces, the biggest names. And so Amazon, clearly a leader in what they do. They fit the bill.
Okay, great. All right. Amazon. Here we go. Let's flip it to a daily. Just look at how pretty this chart structure is. Let's zoom all the way out, Sean, right, and show it against the prior cycle highs. I think that's important, right? So we get a big breakout. It just happened here. I don't know, say November of last year. Big breakout above those prior cycle highs. Boom. And then what happens? Just a textbook continuation pattern, right? Right off of the breakout. You almost get like a pretty standard retest here in late November, right? And then a nice rally through early December. And then we've been coiled 4 weeks now of just, some really good chop here. But when you zoom out, you look at a pattern like that and you say, okay, that's a short-term consolidation. What is the underlying trend? The underlying trend is not just up, it's we just broke out of a massive multi-year base. And now this is the first consolidation off of that base.
Yeah.
These are some of the highest probability consolidation patterns to bet on to the upside when you just get a breakout, right? So you get a beautiful flag like this, or I guess it's technically a pennant. Boom, it's resolving higher today. I could drop a VWAP. Like the only other way I could try to define resistance on a chart like this is by dropping a VWAP from the all-time highs. We took that out on Friday. So it's go time. This
I think so too. What do you think are the chances this can make it to 300 by June? Is that too aggressive? Doesn't look like it would be.
I always like to look back, right? So off of the August lows, and let's not even calculate it off of the intraday lows. Let's say off of the August closing lows, right? Around 160. What did Amazon do through November? 32%. I would say that's a pretty aggressive rally. So 32% over the course of, what is that, 3 months? There you go. Now, if we were to measure that forward from today, another 32%. Got to bring my axes down. Another 32% from current prices, Sean, would put us right around 300. Yeah. So I don't think it's impossible. But that's a big rally for a pretty low volatility stock.
Right. Well, I'm looking at the not that I want to buy the 300 strike calls, but I'm looking at the 300 strike calls, and right now, and this is for June options, the delta on those calls is 11. And what that means is sometimes options traders like to use the delta as a shorthand for the odds of success. And they'll say if it has an 11 delta, that means there's an 11% chance that these calls will be in the money on expiration. That's not a great chance. So that's what the options market is saying. Can the options market be wrong? Of course they can. The options market likes to price things based on statistics, not based on chart patterns. But I bring that up because I was thinking off the top of my head, or at least my initial thought is like, if I bought a bull call spread, bought the 250 calls and sold the 300s, I could do that for $10. That's a $50 wide spread. Do it for under $10. And if we get it right and it goes all the way to 300, we have the potential to make 5 times our money.
And I don't think 300 is out of the question, right? Like we have an earnings report, like you said, coming up. You can get a nice pop and then a follow through rally. Yeah, we can get there.
It's a big round number, $100 roll.
It's the next stop, right? It's the next stop. This is a killer trend. It's one you want to get behind. And sometimes, price targets are tough. Stops are a lot easier.
Yeah.
Price targets is like, who knows? Where's it going to go? So 300 in the Amazon. If you can get
we could get about 225 to sell those calls. So it's not nothing, and it helps reduce our costs a little bit, increases our odds of success a little bit. And, if Amazon does get to 300, which feels like a long shot, well, then great. We're going to make a great return on our investment here. Right. I like it. I think that's what I want to do, Straza.
It's rock and roll. It's beautiful base breakout.
All right. Well, look, we started late, so we're going to keep this short because we all got stuff to do. Sorry for the technical difficulties, folks. If those of you tuning in at the top of the hour, we're sorry we weren't there. But hey, we got done what we needed to get done. We got a good trade idea here. And let's leave you with this thought, everybody. We've been talking about how the market's been messy for the last few weeks. Well, I'm not saying that it's all straight up and to the right for the next 6 months, but it feels like animal spirits are coming back. Would you agree?
This is next leg up type of price action that's going on right now.
That's what it feels like to me.
This is the S&P 500, right? Let's just drop a quick VWAP to show it. Bang, happened Friday. Bulls are back in control. Today's a follow-through day. This is a little short-term continuation pattern that is now resolving higher. Maybe we have a really, really good February. February is typically a bad month from a seasonality perspective. Maybe we have a great February this year.
Well, I mean, this is not a stock, but there's been a lot of talk about meme coins this weekend. There's a lot of talk of quantum computing stocks. I mean, these are not bearish conversations, right? When we're talking about these kinds of things,
Yeah.
that means there's an appetite for speculation out there, which could mean that we're just getting started.
There's no doubt about it. Hindenburg Research just announced that they're shutting down their fund. We are in an environment where short sellers cannot survive.
Yeah. Yep. And Bitcoin doing what it's doing looks like it wants to break out. That's not bearish either. So I think you and I are in alignment. It's time to start getting a little bit more aggressive here. And maybe Amazon is not the most aggressive name in the world, but I think we're in a place where the leaders, the biggest names, are gonna participate and could do well. And I do have some speculative names on the books, so it's not like I'm avoiding them, but I want to get a good mix. I think for the next for this next leg.
It might not be the most aggressive name, like you said, but we're using options, right, to kind of lever up our returns a little bit. And is there a better vehicle than Amazon to bet on a next leg up for the bull market? I don't know.
No. All right, let's go earnings. Give us the push we need. We're here for it. All right, everybody. This has been the Flow Show. He's Steve Straza. I'm Sean McLaughlin. Follow us on the Twitter X. See us on the morning show tomorrow. Or hell, come hang out with us in New York. I know a lot of you who watch us live in New York. Come hang out. We'll be hanging out in the evenings next week. We'll all be there, the whole team. So reach out. Let's hang out. Let's get to grab a slice of pizza or something.
What's the best pizza in New York, Sean?
Prince Street for me. Prince Street pizza.
Pepperoni with the hot honey?
Yeah, but you know what? I don't think I've ever had bad pizza in New York. So I mean, you could give me any pizza from New York, and I'm going to be happy. But if I had to pick a favorite for me, I think it's Prince Street for the win. I think.
It would be mine too. It's a great.
Oh, all right, all right, all right, everybody. Take care. See you next time.
Peace.